Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks just like yourself over the country get the most out of that higher ed retirement plan. Okay, this video here, I'm going to start off like I do other videos, some of my videos. This is not investment advice. This one can get, a little tricky if done on your own. It can be done on your own, but it can get a little tricky. But it will apply to a lot of you out there. We're talking about TIAA Traditional, okay? Current employer, but not investment advice. I encourage you, I can't stress this enough, before implementing this strategy or any strategy I talk about, make sure you contact TIAA first, talk to them about it. Feel free to contact me. My email should be below. I'm more than happy to give you my 2 cents, excuse me, and maybe help you out a little bit as well. Okay. Lost my train of thought here. Okay. So every time I run across, well, not every time, when I run across scenarios I think will benefit you all out there, I think this will help benefit those in masses. I'm going to relay this information to you. Okay. Now, this strategy is plan specific. Okay. So even if you watch this video and listen to it, you say, hey, this applies to me, make sure you call TIAA and make sure it applies. I don't have that information. TIAA has the information in regards to if your plan allows it. Most will, but not all. Okay, so here we go. What we're trying to do in this instance is capitalize on the high TIAA Traditional rates for new money going in. This is August, running into September of 2023. That's important because it's my email, that rate changes each month for new money going in. So this specific situation, we got 2 illiquid contracts, TIAA Traditional. RARC, quite a bit of money in both of them. Still employed, okay? Still employed. That's important. What we're going to do is we are going to do what's called I don't know the official term, but a contract-to-contract transfer from the illiquid account, TIAA Traditional, over to the liquid account, RCP. New monies for RCP, what is it? I got so many cheat sheets here. We're looking at 5, I think it's 5.75%, which is over 1% higher than what we're currently doing. Okay, now, here's where it gets fun. We're going to initiate a TPA on the RC. We're doing, what is it, a 7-year TPA. On the RA, we're doing a 10-year TPA. We're going to initiate that now while still employed. Direct those monies to the RCP. You have to file or submit a contract-to-contract form annually to get those monies from contract A to contract B, or in this case, contract RA over to that RCP. Same thing for the RC to RCP as well. Must submit that contract-to-contract form annually. If you do not, okay, the TPAs will still be in place, but annually, those distributions will go into the same contract. Let's just use the RA, for example. So if we submit the contract-to-contract form initially, like tomorrow, to get it started, it's a 10-year TPA. That first, let's just use $100,000 for simplicity, math simplicity. I know it's paid out over 9 years, but we're going to use 10 years for simplicity. The first year's payment will be approximately $10,000. We submit that contract-to-contract form. It goes over to the RCP. Done. Next year, we forget, or we just don't do it, and I'll tell you why here in just a bit. We don't do it next year, that contract-to-contract form. That 10-year TPA will still be in place. However, that next year's TPA payment will go to that RA contract into money market, whatever the default investment is for that RA contract. Now, rates right now in the RCP are 5.75%, I believe. Let's say next year they're not. Let's make it very simple. Let's say the rate, I don't think it's going to happen. Let's say it goes down to 4% for new money going into the RCP. Well, she's currently getting 4.5%. So maybe we don't want to direct it from a contract to contract. What we're going to do is not submit that form, have that 10-year TPA payment go to money market within the RA contract, and then divvy up the monies from there. Probably not back into the RA TIAA Traditional, okay? So, and we'll invest in something else, okay? We're trying to create liquidity prior to her retirement. Okay, that's what we're trying to do here. Also capitalize on the new interest rate for that RCP. Now, again, this individual has quite a bit of money in either contract. So, if you have $20,000, I'm just making this number up, arbitrary numbers. it may not be worth the headache. I don't know. It's up to you. If you hire someone that's independent, we do it all for you. My client may not even know all the logistics. I kind of shudder to even explain it to her because you see these, it gets confusing. Okay, I think that's it. That's it on this one. Okay, pretty cool strategy that probably applies to a lot of you out there. So something to think about. Not investment advice, certainly something to think about to capitalize on those high interest rates for new money going in. Okay, while still employed. Deep breath. Okay, Greg Shepard here, S&A Financial Services. Hey, go out and have a good one. All right, take care. Bye-bye.